Hey guys, welcome to a quick video by Trade or Fully Informed Trade. My name is Alex and I just want to go ahead and review the markets, talk about the Forex, the commodities, the stocks, and the bond markets. So, without further ado, let's go ahead and get deep into this. I don't really have a lot of time, so I'm going to be talking at a very fast rate. First of all, Dow Jones Industrial Average was up 93 points, S&P 500 was up 14 points, Nasdaq Composite was up 38 points, New York Stock Exchange Composite was up 79 points, and the Russell 2000 was up 14.91 points. S&P 600 Small Cap was up 8.24 points. Overall, what I'm getting out of the general market readings is that smaller companies outperformed the larger companies. Um, uh, Amongst those smaller companies, the technology companies did perform a tad bit better than other sectors. Alright, so let's go ahead and get into some data. First of all, dollar index seems to have made somewhat of a bottoming pattern. Let's go ahead and zoom in on the day's trading session. It pulled back a bit, so pretty much at around 10:30, basically around 11 a.m. it just collapsed. And the main reason why it collapsed is because the markets, especially the stock market, decided to just rally and just this big bullish roar, just like, all these people decided to just buy stocks all at once. All these mutual funds, hedge funds, they want to make up their performance for whatever they missed. They just want to keep on buying into this rally. They still feel that stocks are at a good valuation. They want to take advantage of these short-term opportunities. And, that being said, they want to take advantage of historic lows. And they're not really historic lows, but to put it more in perspective, stocks are still pretty cheap, and they want to go ahead and improve their performance and basically outperform what they've been doing with bonds, or specifically treasury bonds. Let's go ahead and look at the dollar index. So first of all, dollar index went ahead and collapsed at around, give or take, 11 a.m. So let's look at the Dow Jones at 11 a.m. 11 a.m. we go ahead and see that stocks are still coasting way up there. Dollar index pulled back because the stock market's total net valuation is somewhere around 15 trillion bucks, and 15 trillion dollars worth of goods suddenly goes up in value. The value of a dollar will go down in proportionate. So that being said, that's what happened. Dollar index pulled back in response to that. Let's go ahead and review why. Let's go ahead and review some things along the lines of commodities, and the first one would be gold. Let's go ahead and zoom into the 3-month chart, then we'll talk about that channel I was looking at earlier. And pretty much we have this head and shoulder pattern, and I've been talking about that yesterday. And pretty much we got this head and shoulder pattern on the 3-month chart. We have the top head in December 5th or December 6th. We have one on November 7th, and we have the other shoulder at January 2nd. And the probability of this continuing, or this head and shoulder pattern completing itself, relies on the dollar. And if the dollar can actually, if we zoom back a bit, complete its short-term, find some support and basically get itself out of the gutter and move itself upwards in an uptrend. So overall, this whole entire dollar, this play on the dollar relies on it finding support at $79 and pushing itself back up to around 81 bucks. If you look at the longer term chart though, we can go ahead and see that $79 is kind of low. It's on the lower end, but if it could go ahead and find support sometime in the future and push itself higher, probably sometime after earnings season is over in the stock market, or after investors are already disappointed because they over-factored in whatever these companies might be worth, because some people overbid on a company, and the company really can't keep up with that price based on their own performance. So you're probably going to see a somewhat of a disappointing earnings season, because people are anticipating growth much faster than it probably can be accomplished based upon how much we're rallying these days. So to prevent all of that, if you're trading stocks like in the Dow Jones Industrial Average, before earnings are ever announced, maybe let's say you're buying into a certain Dow component stock, be sure to sell the stock before they actually announce whatever they're making, however much money they're actually making for quarter 4 2010. That's all I can really recommend you do. Personally, I don't want you guys to take on the risk of buying into a stock after earnings just to see investors just dump the news. So never buy stocks right after the news on its earnings it has been announced, because chances are you're just going to get caught up in all the professionals selling. So let's go ahead and review something. Because of that, because I see after earnings, markets generally do pull back. What will the dollar index do in response? Chances are it will go up. Because the dollar index going up, it will cause a squeeze on commodities and bonds as well. And that will most likely continue with the bond market's continued downtrend. And that will also complete the gold market's head and shoulder pattern, and the silver market should go back into its 8-year long channel. As you can go ahead and see, this 8-year long channel has held up for quite a bit of it, or yeah, we could call it a 7. Yeah, I guess we could call it a 7-year channel. But a 7-year channel is very strong, and the chances are the likelihood of someone breaking out of a 7-year channel is slim to none. I mean, honestly, I couldn't see the markets going up another 10-20% after already breaking this line. I don't think it's very likely. I don't think that people are going to find silver attractive enough to take on that type of risk. And because of that, where if I were you, if you see this break below this trend line again, you could probably start taking on a small short position. You could do a put credit spread, whatever it is you want to do. But you shouldn't be looking for buy entries at this point. You should be looking for something much more short. You shouldn't be buying silver at these super expensive valuations. And some professionals will run on to CNBC and say, well, I feel that investors will get stopped out at a certain point, blah blah blah. In reality, I saw a pushback. I saw a pushback to a previous resistance, and it kind of went above it a bit. And yeah, some shorts were pushed out, but that isn't enough to justify pushing above a death zone, or basically above a 7-year resistance line. That doesn't justify you buying above a 7-year resistance line, because chances are you're going to get killed by buying in above that type of line. Also, same thing for gold, and I'm looking at gold as well. If we go ahead and look at the max chart, and this is XAU USDO, which is pretty much gold Forex, and pretty much this is the gold spot. And you're seeing the same story here. It's using this line as support every now and then, but in the end, it catches up to you, and you're gonna see. And chances are, we're probably gonna see the market play right back underneath this, and you're gonna see. And chances are, you're gonna see it break below this trend line, and you're probably gonna see a completion of a head and shoulder pattern. If that happens, I'll be hailed an investment genius. But realistically, though, this is what I see with the charts on the long term and the short term included. Like I'm saying, do I anticipate this happening immediately on the spot right now? No, but I do find that there's a great possibility of the dollar market rallying, or investors getting fearful and just start selling the gold market regardless of what the dollar does. If the dollar is the stimulant for why this gold market collapses, though, that would probably take place after earnings season, because once stocks are overly hyped, they get sold off. That causes the value of the dollar to go up. Dollar goes up, commodities respond by selling off as well. So either you're going to have a symphony effect where everything just plays and rolls along together, or you're just going to see investors get a little fearful on this gold market and just start selling off because they're looking at a market that's overextended above a longer term trend line, and because they're looking at a head and shoulder pattern as well on the charts. Let's go ahead and look at the bond market. Yesterday I felt that the bond market was having this quick relief rally, something for you guys to all sell into if you guys were ever buying into the bond market. And more or less that's what we got. Bond market did rally though towards the middle of the day, and you could attribute that to the dollar index pretty much falling down in value, and that's because stocks went up in value. Stocks go up in value. That causes the value of your dollar to go down. In response, that causes the value of the bond market to go up. That usually, and this is just intraday stuff. Over the longer term, though, you're gonna find that the bond market will still go down on a downwards trend over the longer term. Let's go ahead and look at crude oil. Crude oil, same story here. I think that it will probably continue to go a little higher throughout earnings season, but once earnings are over, you're probably going to see a minor to major correction in the crude oil market. It's just going to be this quick symphony effect. You're going to see all these markets just roll over and just start selling off at some point in the short term. And because of that, I still find oil companies more attractive than the oil commodity. I'm gonna stick by that as well. Let's look at financial stocks. Financial stocks being Bank of America. I found Bank of America a pretty attractive play back in November. I felt that we were going to probably have a pullback, but I still felt that Bank of America at around $11, $11.50 was still going to be it was a good time to buy into it still. And, I still felt that it was attractive at $11. And yeah, there was this whole issue about WikiLeaks and everything, but that doesn't change the fundamentals about Bank of America still being the biggest bank, having been able to acquire a huge investment bank, which is Merrill Lynch. So they're a pretty big player in the financial world now, and because of that, I felt that they were still undervalued from a fundamental standpoint. I liked the fact that I was buying into a stock that was trading below its true intrinsic value, which you can determine that just by looking at the tangible book value. And the tangible book value on Bank of America currently right now is $13.15. I felt that it was attractive at around $11. Like, hey, what's the worst that could ever happen? If the company went bankrupt, at least you could get back more than whatever you bought into it for. Of course, for those poor suckers who bought in on Bank of America stock at $55 per share and you get 13 bucks back, well, sorry, that's too bad for you. But for those value investors who happen to be patient enough for all these years, they had the opportunity of their lifetime in Bank of America at around $11. That's all I want to talk about for today. If you want to get access to the charting software that I use personally and I endorse as well, please be sure to click on the link below and you get a quick 2-week trial just to try out if it's really for you, if not, or if it's not for you. Thank you all of you for just going ahead and taking out the time to go ahead and watch videos by myself. Anyway, thanks a bunch, and I hope to see you guys next time. Bye.